yes, you and the team write that macro conditions that underpin our oil demand projections deteriorated over the past month as trade tensions escalated. What is your estimation in just how harmful some of the tariffs, some of the trade war escalations will be for this oil market?
Good morning. So we're still trying to understand how everything will play out, but obviously the market is very focused on how escalating trade tensions may impact global economic growth and by consequence also oil demand growth. But our forecast for now is still underpinned by a GDP forecast on consensus of around 3%. And that translates into growth of about 1 million barrels a day this year. We have downgraded our forecast slightly from last month as we're seeing the readings, delivery data in the OECD and also in emerging and developing countries coming in weaker than expectations already at the start of this year.
So you're already starting to have some impact, Toril, but I wonder, is the bigger risk at this moment tariffs themselves, or is it the headline uncertainty? Is that the thing that's damaging to demand? If we get clarity from the White House, do you expect that some of that demand might normalize and come back into the market?
Well, what we're seeing is it's an unusual level of uncertainty, not just on the demand side and with tariffs and trade negotiations that are changing from day to day, but we're also seeing quite a lot of uncertainty on the supply side. We're seeing sanctions on Iran and Venezuela and Russia. We're seeing continued unrest in the Middle East. We're seeing compliance, OPEC Plus announcing to increase production from April, and the policy from the group beyond April is still to be determined by the group. So there's a lot of uncertainty in the market, obviously. Clarity is always a good thing, but it's a fast-moving market that we're watching very closely.
A few things to go through there, Toril. Let's start with OPEC Plus. As you say, they announced that they're going ahead with supply increases. We've seen member countries like Kazakhstan going even further than that. But I know the IEA is sticking with its cautious outlook that cuts might remain, or some form of cuts might remain in place. Is the market too fragile for OPEC Plus to proceed with supply increases?
Well, of course, there's still a lot of uncertainty in the market, but our forecast shows that global oil supply, even without further increases from the OPEC Plus group, would exceed our expectations for demand growth this year. As I said just before, we expect oil demand growth of about 1 million barrels a day. But you're seeing growth from the Americas, Canada, Brazil, Guyana, Argentina, and Canada adding about 1.2 million barrels a day of growth this year, which at the face of it more than covers the demand growth. So there's obviously a lot of tensions in the market. Non-OPEC supply growth 1.5 overall. Kazakhstan, as you said, producing at record highs at the moment as the Tengiz expansion project came online after many, many years of development and billions of dollars of investment. So the market looks well supplied at the moment, which is creating some challenges for further increases from the OPEC Plus group. And as the group, the alliance, announced themselves, they will continue to monitor the market month to month and increase as needed. So until those increases are confirmed, we will wait to put them into our baseline forecast.